join me in the tradition of giving a big standing ovation welcome to Matt Gold.
Thank you. Thanks for having me. Thanks for the very warm intro. And thanks everyone for coming. Great to see everyone here.
Okay, so we try to inspire, we try to educate, and we try to connect. So we're going to get to the connection part with the questions as soon as possible. But first of all, I gave some highlights of the background. Maybe, a little bit about, how you first got involved in venture, or actually some of your early startups.
Sure.
So, go ahead.
Okay, so I'll go way back. I actually, if we keep it just in the room here between us,
and on video,
I was a lawyer once, 96 to 99. I practiced law, which actually was a great foray into learning about startups, but from a different angle completely. And 96 to 99, you can imagine, we were right sort of like on this preface of the internet bubble, and so I left the cushy world of law just as that world was about to collapse right at the internet bubble. So did law, and then I jumped into, as Michael was saying, Brightspark, which was a incubator and venture fund. And this was very, very innovative for the time. Sort of probably the first incubator / accelerator, I would think, at least in Toronto or Canada. And there's a lot of debate about the differences, but effectively an incubator was really smart people sit around and think up ideas and then attach people to them and start companies. They fund them and start companies. So I got this incredible opportunity. I left law and started working as a director of ventures and started to get immersed in this incredible innovative culture, watching what worked, what didn't. I formed a lot of opinions during that time about how to start companies, and I actually don't like the incubation model. So I learned a lot about that. We can talk about that after. But I realized quickly, after having done one or two investments as director of ventures, I did more of the venture side, that I was sitting on these boards and I was telling these CEOs what to do, and I really had no business doing that. I felt that having not operated, that it really didn't make sense for me to be, telling these people who had taken this monumental risk at starting something, and I really was respectful of that I just didn't feel comfortable that I knew enough to do that. And so right after that, or during that, I really started to angle towards starting a company, which I did. I co-founded a company called Tira Wireless in 2001. And that was with one of the managing directors of Brightspark, not Tony Davis, who was actually the inventor of WinFax, but I'm sure no one even knows what that is. But yay,
how many people know what WinFax is?
Okay, good. All right, good. So bravo to him. I mean, the first way you could email faxes, so this was a big deal. Ultimately, it was Delrina's premier product, which was sold. Delrina was sold to Symantec in '95, and it was one of the largest private company transactions in Canada. So I got to learn from some of the most amazing mentors in Mark and Tony. And Tony co-founded Tira with me, and alongside Alan Lau, who is now actually the co-founder and CEO of Wattpad. So, I mean, you'll see this continuation of ecosystem and branching out of people and reconnection, and that's how ecosystems are actually built. And so we started a company called Tira Wireless, and that was focused on downloadable games for your phone in 2001. Now, think about that for a second. 2001, these were the very first phones that actually supported a downloadable standard, which was J2ME, Java, and so we were way too early. But that was super cool. I mean, so we started building games for phones, and I ran around doing deals with all the carriers. That was the only way to get to market, carriers. So all of North America, Europe, spent a lot of time doing that. Built a huge network, and we became one of the top games publishers. And not that anyone wanted them. Our first check from AT&T was literally for 40 cents, and we had it up on the wall from AT&T. You can imagine that was our publishing revenue share, but it grew, and by 2004 there was actually a fair bit of demand for these downloadable games. We built a relatively large company. We raised $30 million in venture. Lehman Ventures led our B round. Brightspark was obviously a major investor. Flagship out of Boston. So we learned how to raise money. We got out to the Valley. We opened an office in San Mateo, and I spent 3 to 4 years really spending most of my time in Silicon Valley and commuting back and forth between the team in Toronto and Silicon Valley. We sold the publishing business in 2004 to a company called Airborne, who had a terrific exit. And we continued down the technology path, which really was a platform that made all the games work in the first wave of mobile across all devices, which was really the challenge in the first wave of mobile before iPhone came out.
What's the definition of terrific exit?
Airborne sold for $110 million in 2007. So I think that was a pretty terrific exit.
Go ahead, sorry.
Yeah. And then Tira did not have that same fate. We actually had a horrible exit. And so we had a huge ride up and we had a huge ride down, and that was when the iPhone came out, and this technology really didn't matter anymore, because even though we had sold to Sony and Disney and Warner and THQ, and we became really a critical part of the value chain for deploying mobile content, it didn't really matter because none of them were really making money. So when the iPhone came out, everyone immediately turned to that and said, I can now launch a game for $10,000 instead of $2 million, which most went to us. And so we had this, and that's technology, right? And that's venture. You swing for the fences, you go huge, and in that case, we didn't win because the market shifted so incredibly quickly on us. But that, I wear that as a badge of pride because we learned so much about starting a company, building a company, selling the publishing business for a successful exit, and then working on the technology, building a significant business around that, spending tons of time in the Valley, building up the network, and then lose it. But that, I tell that story because entrepreneurship and venture capital is rarely a straight line to success. And so I love to share that. And in 2008, I then became a partner at the BlackBerry Partners Fund, giving sound advice to entrepreneurs in starting their companies. And that went really well. And while I was there, I did 3 deals, and all 3 now have exited. And some were really exciting exits, like Social Deck, and NextAge recently sold to Millennial Media. And then by 2011, my partners at BlackBerry Fund, which is now Relay Ventures, wanted to raise a much bigger fund. And I started to look out and say, I don't want to do that. I want to raise a small fund because, if you raise a really big fund, you have to write really big checks. And companies, when you're writing really big checks, it means you have to invest later in their sort of stage of development or further down the value chain. So Series A, maybe even a bit later. And I'm a seed guy. I'm focused on that early innovation, early signs of product market fit, working with entrepreneurs to get to the next layer of capital. And so at that time, we were starting to see some macro trends that really lent towards this model. Early sort of micro VC funds had been created by guys like Jeff Clavier at Softtech, Aydin Sencut at Felicis Ventures, and I looked at that model and it really resonated with me. So when my partners went to raise the second fund, I went off to raise a $10 million fund. That was 2011, June of 11, and closed that fund. And it ultimately ended up being about $17 million. And in that fund, as Michael said, we did about 18 investments. Recently closed a second fund in October of $40 million, and we're off to the races. So in the second fund, we already have 4 deals. So hopefully that's helpful.
That is very helpful, and congratulations on that. Points that they should say to an American VC that's a big convince them that it's a better environment for their startup.
It's really about creating demand. I mean,
right. If you want to rock the ship, everybody's going to.
Yeah, I mean, the reality is you have to know how those VCs think, what their drivers are, and approach them at the right time in your stage of maturity. with enough demand that they don't have the option to ask you to move. Right? I mean, it's that simple. I mean, if you go to them at seed, they won't do a seed deal. I mean, they might do a seed deal if, you know, perhaps they know a co-investor like myself, and I'm leading a deal and they love the deal, and I'm going to manage the board elements of it. They're not going to ask you to move because they have a local partner who's watching that deal, but they're not going to get on a plane to fly here to do board meetings for a seed deal. Doesn't make sense, right? Maybe you're a more mature company. Maybe you're now a Series A and you're generating, you know, you have great momentum and you've got great growth and there's a lot of demand for your term sheet. And they know that if they say you have to move, they're going to lose that deal. Right? So you know, it's just a sale. It's just a function of being really good at storytelling and sales and a combination of all the critical things you need to be as a great hustler, founder, that will keep you here.
So, what are you looking for? You're one of the few guys that are doing seed stage deals. What are you looking for? And if somebody walked through the door with that, how long would it take to get done?
Well, it can get done quickly. I mean, you're looking at the investment committee of the fund. I will have an announcement soon about an increase in the size of the fund partnership group, but not for today.
Oh, you can tell us.
Which I'm very excited about. But
just look into the camera.
But so you can assume that's happening, and so the investment committee will grow. But we pride ourselves on being nimble, and you have to be in seed investing. That being said, I mean, it really depends. What's the source of the deal? Do we know the founders? Are they highly referenceable? You know, all these things play a huge how well do we know the market? You know, so there's this huge series of criteria that we have to get through, and some things are automatic check marks. But if there are no automatic check marks, then we have to do significant diligence to get there. How quickly can that happen? It can happen very quickly, but you know, it just depends.
And
There's no answer.
What are you looking for?
So I mean, we are looking for founders with tremendous passion who have established some level of validity to the problem that they're solving, that the problem exists, that they believe in it's reasonable to think that they are on the cusp of the solution, that they can't sleep at night because they have to solve this problem.
How many people can't sleep at night?
I can't sleep. That's a whole other discussion. But it's really about that, that passion, that there's a big problem to solve, that it's a venture scale company. I mean, a lot of the time it's just not. It's a real problem. There's a solution, but it's not. The market size isn't there. It's not that big of an issue. It's not that big of a market. So you have to keep that in mind. And then really, I mean, if you think about it, so if you look at it as a three-legged stool of team, market, and traction, team is, the overwhelming factor for us. I mean, because as an early stage investor, it really, you don't know exactly how the market's going to play out often. It's really early stage. Traction are good indicators, but it's not, you're not likely not completely a product market fit. And so it's really about the team that can navigate all of those challenges that are out in front of them. And so when we look at the team, it's all about composition. Do you have the component parts that make, a functional team? And I always go back to Fred Wilson. I think he puts it best, which is, do you have the hacker? The hacker is, of course, the technologist who can really put it together, not over-feature, not overbuild, but really get you the product that you need to establish your product market fit early. Do you have the hustler, which I referred to earlier? The hustler being, of course, the business development person who can attract capital, who can sell the vision and attract everyone and recruit and all that. And then someone between those two really sharing product and being maniacal about their user and understanding their user to create incredible product. Often, depending on the type of company, you also might need a designer in the mix who owns the user experience and the interface. So we look at that, and that to me is what is the most compelling. I mean, you have to understand, and people forget this, and so it's like, how quickly can you do a deal? You know, sometimes I kind of think about it like, as quickly as you can make a decision you want to spend like 10 years with someone, because it's a partnership.
Yeah.
And you're going on a very long journey. So it's not like this flat decision of like, hey, good team, good product, good traction, okay.
Yeah.
You know, it's like, what's the chemistry like? Like, are we gonna do this? Are we gonna build something? Are we gonna change the world together? Are we gonna disrupt an industry? Some sort of industry that needs disruption. So, I mean, it's a really amazingly intense process.
Yeah.
So, how many people have been to Startup Grind before? How many people have seen other VCs here? How many people have actually heard another VC from this country just say what he said in terms of, are we going to disrupt? Are we going to change the world together? Yeah? So, you know, that's what I'm saying in terms of what's potentially different here. Who's got a question? Right at the back there. Please stand up and shout out your name, and I'll repeat the question.
Sure. My name's David. I have two questions for you. First, you said that the incubator model is done at retail. So why? And secondly, you talk about market validation. What is Canada specifically? You see a lot of organizations maybe based in states or large market in states. In Canada, what is large enough market? I know it's a very big question, but
Okay.
So what were the questions again? I didn't hear. You heard it.
Sorry, what was the first one again?
The incubator model.
Oh, the incubator, yes.
That's it. Okay, so the
Okay,
questions
so,
are,
yes,
why don't you like the incubator model, and what is validation?
I knew that was coming. I made the flippant remark that I didn't really, like, I got to witness firsthand the incubator model. What I don't like about the incubator model is I believe that the idea for the company needs to be generated by the founder, and there needs to be idea attachment. And so it's very hard to come up with an idea and put a founder on it. Because, like, how do you fabricate passion and problem, right? And so, you know, when I talked about team and that passion, it's really hard to, it doesn't feel very organic, and I think it can work. I mean, don't get me wrong, like, there are instances where, you know, deals that were incubated and they attached someone to it, they got the idea and they did it. I just think it's a little less organic. And so that's my issue with incubation. The second question you had is about market sizing, Canada versus US, and I think the answer is, I don't care about I never care about, I don't think about a market as Canada or US. I would never invest in a company that is focused purely on Canada. It's irrelevant to me. I don't think in those terms. I think globally. You know, and if someone came to me and said, well, I'm focused on doing this in Canada because there's a regulatory environment, that this is a big opportunity, I've never done that, and I just don't think that way. I'm not tooled that way. And again, you know, why focus on a market that is 10% of your neighbor to the south? So it doesn't even register.
You're in a different space, highly competitive. What are you seeing happening on the crowdsourcing platforms from a competitive point of view? And do you see them as being realistic financing options for people in this room? We really just need to raise 50 or 100 or 150. You know what the angel networks are like. It takes 6 months, 9 months. Like, what's your take on what's going on in the crowdsourcing platform?
Yeah, I think it's really interesting, and AngelList is becoming an undeniable force in financing of early stage companies. And so, you know, we watch it very quickly. We're engaged with AngelList. We look at it. We look at it for deal flow, and syndicates is a really interesting platform as well that is led by VCs, and people put money into the VC syndicate.
How many people know what an AngelList syndicate is? All right.
Yeah. So I mean, it's really transforming that earliest angel stage. And one of the reasons that I think seed investing is sort of changing to sort of move a little bit further down the chain is because, a lot of that gap is being filled by those platforms. So it's really interesting. There's this constant, Fund 1 was raised June of 11. The average seed deal was about 750,000, or somewhere between 500K and $1 million. The average seed deal now is like 1.5 to 2.5 million. And that's in a 3-year period. And so, this industry evolves and changes so quickly. And AngelList, because of the regulatory environment, hasn't really made its way here yet. But that will change.
They've hired an employee, by the way, a Canadian employee in Vancouver, right?
Yes. They're figuring it out, and it will get here. I think it has to happen province by province, and I think crowdfunding for angel investing is legal now in Saskatchewan and maybe one other, but not quite Ontario. So, it has to work its way through the regulatory system, but it's going to change things, and so we're watching it very closely. And
would you invest alongside a crowdfund, like a crowdfunded deal, like an Indiegogo or an equity crowdfunded deal?
So Indiegogo is sort of different. We wouldn't do that, but would we do? We are actively looking at creating. As soon as AngelList comes here, we would actively look at potentially creating a syndicate.
Yeah.
Sure.
Checks as small as $1,000 in those syndicates.
Sure.
Okay, who's got one? Go ahead.
So if ever, do you as an investor ever seek out deals, or do you find that they just all come to you?
Oh no, we actively seek out deals and they come to us. It's a combination of the two. Our best lead sources are through warm leads, people who know the fund, who are highly respected in the industry, are friends of the fund, who we've either worked with or co-invested with, and so on. Those are typically the highest quality leads, and you have to be out checking in with those people all the time. I'm, regularly in Boston and New York and California. I'm regularly checking in with the people, the operators in this ecosystem to see what they've seen. And then warm intros just through entrepreneurs we've invested in or others highly respected in the community who are delivering warm leads. What we haven't done yet is invested in any company that has come in off our website at info@goldenvp.com. And I actually, when we created the website, I actually wrote, Hail Mary is one way you can do it. Really, your first task is to get a warm intro. I think I have 2,000 contacts on LinkedIn. I think, it's not hard to find someone who knows me and that I respect. And I just find it amazing that even saying that on the website, still just, hey, Hail Mary, here's my business plan.
Such a great way to check resourcefulness of the startup too.
Yeah.
Sure.
Yeah.
Yeah.
How about a deal that you lost, that you wanted to be in? Is there a deal that you didn't get in that pissed you off?
Oh, yeah. I think there's.
Want to name it?
No, I don't think there was. I don't think there's anything there's nothing in that I can think of that. Oh, I didn't get in and it became Airbnb, right? I haven't had those. I do have a phantom portfolio. This way, all VCs have a phantom portfolio. These are the deals they said no to, and now they're like, oh, I don't know. Maybe that was a really bad call.
Yeah.
So I have like a phantom portfolio, a quiet one. I won't name them yet.
That's just likes to brag about that stuff.
Yeah, no, I'll happily brag about them. I don't think they're mature enough to know if they're huge winners yet. Yeah. So when they are, then I'll brag about my phantom portfolio. But no, we're really happy.
So why didn't you get that deal? One of those deals. And I'm coming to you next.
No, I passed.
You just said no.
Yeah, the phantom portfolio are the ones you passed on. That's way more painful than the one you tried to get into and didn't get in.
Right.
I haven't had a lot of those, thankfully.
Right.
And that may be that I wasn't in the right place at the right time to get into some of the best
it's not very
deals. So it's not. No. There's been or I just wasn't at the right place at the right time to get into the right deal. So that's not
Go ahead.
What I'm curious about is that venture scale market, is that something that has slow growth, or is that actually it's a huge, obviously, area, but does it fit certain criteria for C?
That's tough. I mean, it's a tough one because, as you say, it's a really big area, and you could argue that, like, I don't know. I mean, software tools. I came from the software tool space where we had like that, so I'm a bit biased against it. But there have been, instances of big success in that area. I mean, Dave Johnson, who's an angel investor from Vancouver, created PhoneGap, and that was a great exit to Adobe. And that's absolutely a software tools platform. GitHub, I guess. I mean, like there's lots of examples of winners, and I think that as we look out at the trend lines and the evolution from web to mobile, there's opportunity there, but it's really hard to sort of dig it up and find something that has the barriers and the business model to win.
Out of the 18 deals, how many times have you played more than once with the same investor? So, are there similar investors?
Have I invested with the same investor multiple times? Yes, I have.
And who?
So who am I in multiple deals with? Atlas Ventures at Boston, SoftBank Capital out of New York at Boston, Horace Wirtz, Version 1 Ventures, we've done a number of deals together. Felicis Ventures out of California. I think those are a few examples. I can't think of others off the top of my head, but there's more.
So Aiton was speaking at the Angel Capital Conference in the States, and he basically reached over the table and he said to the entire angel community, he said, I'm coming to do your deals because you're not fast enough.
Love it.
Are you feeling that kind of pressure in terms of competitive pressure from, anywhere in the world now? Anybody else? Is the Valley actually reaching into this ecosystem?
Yeah, absolutely. I mean, it's our job to not miss great deals, and particularly in our own ecosystem. I mean, there's nothing that will make me more. I mean, Jonathan, associate at Golden Venture Partners, right there.
There's Jonathan. Put up your hand there again. Yeah.
Jonathan, how angry would our fund be if we missed something in the ecosystem?
Yes.
I mean, it's our job. I mean, that's our job. How can we miss the extraordinary founders in our own ecosystem?
Okay,
Yeah. Sorry.
go ahead.
So hi, my name is Ken.
I can.
So I invented a way for users to browse in parallel.
Sorry, I missed that.
I invented a way for users to browse in parallel.
Users to browse in parallel.
Oh, to browse in parallel.
Like 20 years ago, but only now is the timing right. And but I do have a question. So why are you looking for deals in Canada?
I'm not just looking for deals in Canada.
Okay, but what is that?
But it's different for me to miss a deal in California than it is to miss one in Toronto or Waterloo. I think it's much more inexcusable.
Right. Yes, sir.
Now, this might be a silly question, but there are dozens of apps that does the same thing. Some of them succeed, some of them fails. The competition-wise, and not necessarily the best apps that succeed. In your own investment portfolio, what are the suggestions or what is the process you work with investors to differentiate their products among all the competition that's most of them does the same things? If you have a methodology process for that, that's one thing. And are you looking for investors if I have something that's better than booklets for consumers, more fun, potentially better in business for you, something like booklet, would you be interested in investing? Are you open to seed capital investment? That's the second question. Can we send a business plan and would you be interested?
Sure, of course you can send a business plan. Maybe not to info at
And a warm introduction.
But the first question is interesting. I mean, in my estimation, when you say that, so this is your classic VHS Betamax discussion. Betamax was a better product and VHS won. So which one was better? Which one would you have wanted to invest in? So VHS won, right? Right. So if you could put money in one of them in retrospect. So the best app is the app that wins. So I think that's another way of looking at it. And so,
Up in effect or not?
well, no, sorry.
How could you predict to some extent?
Not so much predict, but is there a way to make it so that really something that's slightly better than others would end up winning over the competition? Is there a methodology you use or suggest to your?
I don't think there's a silver bullet. I mean, I think there's typically a lot of lead bullets there, and I think it comes from the sophistication of the team. And I go back to team and their ability to execute, their ability to understand their customer, to build a moat around what they're doing, to implement the virality that's necessary to push their product forward in the way that consumers connect with it. And so, that's why I say that the app that wins is the best app, right? Because that's the one that got out to consumers and the ones that consumers somehow connected with. You may look at it from a design perspective and say, this is terrible. Why is this winning? Well, it won, right? So it doesn't really matter.
Has anybody met Nick yet? Nick, give a wave. Nick just graduated from a coding boot camp program, I guess. And he's interested in building his portfolio. So if anybody wants to develop anyhow, there was Kevin. Kevin, go ahead, ask a question.
So my name's Kevin. I'm a story architect. So I'm really interested in hearing the story of your turning points. And so it's going to follow along to this. What's the point that your team, what's the turning points that they make that really makes a startup take off?
Oh, it's product market fit. I mean, it's like there's pre-product market fit and post-product market fit. It's like it changes everything. I mean, it's that moment where you know the customer is using your product and not because you're begging, right? And that is it just changes the confidence level of the company. It's a turning point in everything they've been working towards. It's gratifying. It's something to build off of. One customer begets another customer. Then you can turn to advocacy to sell, and you have case studies and, all of the tools that you needed so desperately to get anywhere. And so if there's one thing that, as a seed investor that we really work towards, it's that sort of product market fit. And that is to me like the holy grail of our stage.
So you were there when the iPhone was delivered, and it forced the dropout of the bottom of your company. Eric Michikowski was a guest of ours, our first guest, the week after he raised $10 million on Kickstarter. George Zachary from CRV interviewed him on stage. What's your advice to Pebble when Apple's about to, or has introduced the watch?
Well, Pebble I don't know if you've been following, but I think today is like selling millions of dollars worth of their new watch. And I think it's a very strong indication of the product market fit. And, someone made a great point. I was reading today that, Apple's I'm not gonna say anything about Apple. They always surprise and deliver. But Pebble has had years to work on some of both the design and the battery of the watch. And battery is a huge thing when it comes to watch. Imagine taking off your watch every night and charging it. That sucks.
Yeah.
And I think that's one of the biggest problems with some of the wearable technologies as well, is that, yeah, it's great, but is it so great that I need to charge it and wear it every day? So, I don't know. I think Eric should continue doing what he's been doing so effectively for so long. I don't think you can prepare yourself for a giant like Apple coming into your market. They'll probably take the high end of the market, but they'll educate the market like crazy. And, Pebble may have a great shot at the mid-market, which could be a huge market.
They're in Best Buy, right?
Right.
Okay, so we got about 10 minutes left. If you've got a question and you came here to get it answered, be emphatic. Murray.
Mine's great.
You mentioned that like you're a little ahead of the curve. So are you seeing products now that you would consider to be ahead of the curve? You might not invest in that. Like 10 year or 20 year? I'm just curious where you are today based on that experience.
We are thoughtful about timing, but we don't let it entirely dictate whether or not we'll play. As long as we think there's a reasonable time horizon between product completion and the marketplace, but absolutely. I mean, you learn, right? I mean, you learn and you diligence across the things that you have experienced. But we still remain pretty cutting edge, but we do think that you need to make sure there is market readiness, and it's one of our checkpoints.
Go ahead.
Hi, I'm David Blackmore from Uplay2, and it's an Uber type program but for music teachers. And I know that Uber is very much concerned about the way employees are being regulated for that type of service with the taxi. Is that something that concerns investors? Is there anything that you could give advice on? Would that have an impact on investing in a business similar to Uber?
Well, I mean, we absolutely look at the regulatory environment, and I think in the case of Uber, we'll make a determination. Look, a lot of disruption requires regulatory change, and so will we not invest if we don't think there's any chance of even getting into the market to prove your product? Then we likely won't invest, right? Because of the regulatory environment. If there's a way to sideways get into the product to prove the pent-up customer demand, and then slowly have regulatory bodies come after you and try to not exactly know what they do. I mean, if you think about Uber, the way they did it was through Black Card. And the regulators were like, well, I think that's not good. But they couldn't, they researched every environment, and every new location and a region, and made sure that they had a way and a defense so that they could delay any sort of real action against them. It was brilliant. And they disrupted that entire industry and continue to disrupt it, and it was a massive opportunity. So no, I wouldn't let it deter us, but you have to be able to get in there to show that your product works in order to affect the regulatory change. Another great example is Airbnb in the hotel industry, right? And so there's lots of these great examples, and there's some of the biggest companies that I think we'll see in our lifetime.
And you do it.
Sure.
Yeah. Go ahead, sir.
Hi, Matt. My name is Mark, and my question to you is, the common string between everybody here is going to be marketing their product. So, in your experience with all the companies you've worked with, what are some of the do's and don'ts of marketing your products, especially in the early stages?
Yeah, it's a good question. It's funny, when I think back to 2011, where I was saying a seed deal was $500K to $1 million, the reason was all you thought about was getting the product built, because there wasn't so much clutter in the industry around products being built. And now there's a product for everything. And so the next step is that marketing phase, is that go-to-market. It's distribution is the biggest challenge. And so it's a difficult question to answer, because the answer is different depending on the type of product, whether it's consumer or enterprise, whether it's an application or a web product or an e-commerce product. So it's really a tough one to answer. There's lots of tips around marketing strategies that I can point you to after, but I think if I went into it right now, it would take too long.
Thank you.
Cheers.
Eric.
Eric, and so you've really branded yourself as someone who invests in mobile. But now that everything is mobile, I'd be interested to know how you have refined your thesis. Most useful would be the kind of tech companies that you won't invest in, that you're not investing in.
Yeah, no, it's a great question. We've talked a lot about it in Fund 2, how we are branding and remaining a mobile-focused fund. And while everything is mobile or has a mobile component, there is a distinction between that and sort of what is native mobile opportunities, right? Built ground floor up on a mobile device, and as a service that predominantly leads with a mobile platform / service. And so I would say that's the distinction. It's where we excel, it's what we know, and that's everything across consumer and enterprise in mobile, from mobile verticals and platforms. But where I think we are willing to move out of our mobile-only thesis is particularly in our own ecosystem, where we are investing in things that are more about the extraordinary team and founders in spaces that we know relatively well or we can get up to speed quickly, and we want to back these teams who are disruptors in new and exciting areas, such as robotics, which we've looked into deeply, and Bitcoin, which we're looking into deeply. So we are getting sort of out of the mobile-only thesis, but predominantly and most importantly, just like anyone, when we invest remotely, so in California or Boston or New York, it's really important that we can add value. We can add a lot more value locally in a company that isn't only mobile, because we can help with connections and recruiting and introductions and a number, and preparing for their next round of financing, and all of these great values that we can deliver to someone in our own ecosystem. But if we co-invest with someone else remotely, we're not as strong on those value, on that value. And so we try to stick to our mobile thesis when we're investing more remotely, like in Boston or in California or in New York, because we know we can deliver huge value to the entrepreneur and the co-investors.
Go ahead.
My name's Vivek. I've actually been in the States for 12 years, and I'm moving back. Many of my friends are people who are getting this vague statement saying, oh, it's not going to be the same in terms of entrepreneurial environment when I move back. I know you can spend a little time at a VC in the US, and David seemed a little bit fearful investing in Canada. I'm trying to dig through what's fact and fiction. Is there something here that is a little bit less attractive? Is it culture, right? Regulatory environment? Smaller market, or is a lot of this just sort of fiction?
I think it's distance. I think that when you are in Silicon Valley and you are a VC and you are on Sand Hill Road and you have 3,000 opportunities within a 20-minute drive of you, why would you get on a plane and fly to Toronto to go to board meetings? I mean, I think it's really as simple as that. Like, they're not hurting for a great innovation and opportunity right in their backyard, and that puts the onus on companies here to be that much more compelling to attract that layer of capital. Now, other investors recognize that that's a short-sighted view, and that these other ecosystems are you can probably get better value, you can get in earlier, that there are just as innovative people. I mean, how many Canadians are in the Valley right now? I mean, there's no lack of
300,000.
300,000. There is no lack of talent coming out of our ecosystem, and I would venture to say of the 300,000, probably 250,000 are from here, like from our ecosystem right here, Toronto, Waterloo. So the talent is here. A lot of them are going. A lot of them are coming back, but more and more are, and maybe even after they've had 4 or 5 years of experience in the Valley, that they have connections, they have network. VCs are getting more comfortable co-investing with VCs like our fund, and that will start it'll start bridging the gap, giving them the comfort level.
Technical question, or a national question. So the FedDev program, not FedDev, sorry, the National Venture Capital Action Plan.
Yeah, VCAP.
Yeah, VCAP. $400 million. I think that was part of your...
Yeah, part of the 40 million.
And so we had Relay here, who also received, I think, $15 million out of that.
Yeah.
And then next month we're having Robert Antonates, who has received some of that to get Information Venture Partners going. So a little bit about, is this a hopeful time for venture capital in Canada? Are we turning a corner here? I mean, from your side of the table, it's, you've had a pretty good run over the short period, but I mean, you're, an interested observer of the rest of the ecosystem as well. So a little bit about that program, its impact, and
I think it's a great program. I mean, I do think venture has been underfunded in Canada. I think it was kind of good. I mean, I think for a while it was kind of good to shake it out and retool and sort of look at venture capital again with a fresh approach, maybe with some new and emerging managers. And
you are. The other two guys are.
Well, Dave and Rob, who Dave and Relay me?
Relay are, I mean, John's been around forever. And,
John, absolutely.
And he's a very tough guy. But and Robert out of RBC, has been around for a while.
Sure. But they had to retool also through that process.
Yeah.
It's not necessarily the people, it's the perspective. Right? And look at venture in a different way. And if you look at Relay, they've been innovative. They opened an office in the Valley.
Yeah.
Right? So super innovative. And Dave and Rob have just done a great job on their previous fund, which has attracted investors to this fund. And because they were smart enough to navigate those waters. And so, it filtered out the people who, really need to be in venture, how to view venture, how to work more closely and globally. And I think that's been a really important thing. If you look back at venture in Canada, it was really done in a vacuum. It was there were 5 funds in Canada. And it was like, don't touch my deals that are in Canada. I'm the Canadian VC, so I do those deals. And that's the worst thing you can do because you never learn from co-investing with these, really seasoned funds who have domain expertise that spans, 30, 40 years of investing and imparting that wisdom on young, not that young, emerging managers like myself. I get to learn from them. And I think previously that didn't happen, and now it's happening all the time. And I think that's great for our entire ecosystem. But to get back to your point about VCAP, it's going to release a lot of money into our ecosystem. It's not just the $400 million. That $400 million will get levered up by the pension funds, banks, and so on to create, probably, $800 million to $1 billion worth of capital funneling into funds in Canada. Now, they've also been very smart. There's not you have to only invest those funds in Canada approach. They've learned over the years that if your fund is located in Canada, you're going to do a lot of deals in Canada. And it's okay for you to go do deals in the US as well. I got to watch it firsthand as an entrepreneur and then back into the BlackBerry Fund and now, so I've really been closely affiliated and involved with venture in Canada since 2000. This is the time. I mean, this is super exciting. It's high innovation. The market's growing globally in terms of, particularly mobile, which we talked about. It's an unprecedented.
And the IPO market in Canada, is it, you think, 2015? Did Wattpad file?
No.
No. Okay.
No. Wattpad, no. That's not sort of right now the focus of Wattpad. But I think it'll be an improving environment. It certainly has improved in the U.S. Most IPOs last year. I think the interesting thing to watch is sort of the growth stage. It's getting a little frothy because they're capturing so much of that. Companies used to IPO way earlier, and now they're not. They're holding out and building more and more value in the private. And so all the people who waited for IPOs are now starting to pile into the late stage privates. That's a really interesting trend, and we haven't seen it as much in Canada, but I think that will start happening.
If you think, I'm sorry, I just want to get these in, and then we'll take five or six more questions, or 4 more questions. So if you think about, and I'll do the names, name the names, and so you don't have to. But we got Shopify in the hopper, we've got Hootsuite in the hopper, we've got potentially Wattpad in the hopper. Desire to learn. I mean, basically, if you look at Homer's portfolio, this is really a pre-IPO portfolio, and the TSX is highly motivated to play because of the commodity environment. So do you think that the retail investor or whoever's going to be the receiver of these IPOs is going to be disappointed 2 years down the line, 3 years left down the line, or do you think that, you know, we really have these unicorns that are authentic game changers?
Well, I think you're making the assumption they're going to go public in Canada, which I don't know that that's true. I mean, you've got to look at if you're going to go public on the world stage, you're likely to go public
In both markets, probably.
in both markets simultaneously, right? So I wouldn't judge them as Canada versus U.S., right? And so I don't think the analogy is any different than the analogy that's happening right now in the U.S. And so, as a retail investor, you know, there are certain trends where more and more of that value is being captured in the private market, and IPOs returns have not been the same as they used to be. And so that's sort of the overriding concern that I think is relevant across the border. That being said, if you look at, you know, Facebook, everyone freaking out about the valuation and so on, but you know, look at where it IPO'd, and people have made a phenomenal return on Facebook since that IPO. And so it's really interesting. I mean, it's not a foregone conclusion. I think it's still working itself out. I think that the growth money piling into privates will learn likely a difficult lesson, and it will go back to a more balanced, you know, swing. It's always like a huge swing one way, and then it'll balance out over time. But I don't know that timeline. It's not sort of where I play the most.
Okay, 4 more questions. Go ahead.
Hi, my name's Jean. I'm just curious about your particular fund. Are you looking for the founders to exit out? Is that part of your checklist? What do you see as successful deal?
When you say the founders to exit out, you mean replace the founders? Or do you mean like the company to sell?
Yes, the company to sell, to IPOs, that's important to you.
At some point, absolutely, but certainly not too early. I mean, we're there to build a huge company. The ideal would be, you know, an IPO down the road where you create all that value and you're self-sustaining, and you build a company that is everlasting. That's the ultimate in my mind. I mean, $1 billion exit's okay. You know, that's good too. But I mean, if I had my choice, it would be to build a company that, you know, endures and creates massive amount of jobs and innovation here in our ecosystem. I won't complain if it's an investment in another ecosystem, but, you know, I mean, these are sort of like, you know, quiet intention, really exciting opportunities. And so that's how I think about it.
Okay, go ahead.
Yeah, hi Matt. Love to hear your comments on the aspirin versus vitamin scenario. And hopefully you remember me for that question, so I don't have to go to info with gold and I can say
What's your name?
Chris.
Chris, what's your name of your startup?
Stealth.
Stealth. That's good.
But an aspirin opportunity is obviously a situation where the startup's identified major pain, they've got a 10x solution, they can turn this old apple cart upside down and disrupt it. It's sort of a no-brainer that needs an attack, and we should get on with it. The vitamin scenario is, I've got a product or service that will augment an industry and has tons of zeros on the back end of it because it's got global scale and potential. Are you looking for pure pain, or do you look at aspirin situations that may not be a 10x disruptor, but they are meaningful opportunities?
Yeah, I mean, it's pretty simple math. Like, venture funds operate on the power law distribution curve, and so, or the power law of distributions. And what that means is, you know, 1 or 2 deals will likely be the returns of your fund. You know, and so you have to shoot at the outliers. And so will we invest in something that we don't think will do at least, you know, 10x? No, we won't. It just doesn't make sense to do it. Now, later stage funds will, and they'll look at it and say, okay, but they're going to write a huge check. They're bigger funds, and they'll write a $30 million check, and if they return 60 or 90, that's good, you know. But we don't do that. I mean, we're an early stage fund, and we're there to really build disruptive companies, and we need those kind of outlier type exits to be successful.
Right, but if I could show you 3x on a $40 million fund, and make the fund, potentially.
Yeah, sure.
Then
Sure, but if you do the math on that, so 3x on a $40 million fund is a $120 million return just for the money that we put in. I mean, we don't need that. I mean, we look at it, you know, each deal should have the potential to return, you know, a large portion of your fund is the way we look at it.
So you look at it, the numbers sort of spoke.
Yeah, I mean, but it has to be, you know, feasible. Sure.
Thank you.
Yeah.
Okay, go ahead.
So I'm Jeremy from Lighthouse. I'm just wondering, as far as Canada goes, what do you see Canada doing really, really well? I mean, we have healthcare here, we have oil here. There's a lot of tech industries that, you know, we seem to get better at, and others that we're not there. Do you see anything that Canada does has a natural advantage to, or you've seen has been doing really well at?
Everybody hear that? Yeah. What's Canada best at?
What was that? Bacon. Besides bacon. Okay. I really don't think that. I don't know. You know, maybe I need to sit down and think more about that. I just don't view our ecosystem as different than any other top tier ecosystem. Boston, New York. Maybe it's a bit naive, but when I look at the talent, I think maybe our schools are phenomenal, and you know, that's the reason why there are everyone's recruiting all of our talent to the Valley. I think that, you know, by nature, Canadians were a little bit more conservative, but I think we're kind of breaking out of that shell, which I think is super exciting. And I have my own sort of theory about that, and I think it happened sort of, it started in 2008 when we withstood the financial crisis on the level that we did, kind of gave us our own sort of footing, and all of a sudden the dollar was par. We don't want to talk about that now, but it was. And no, but it really, it really showed like some real smarts and gave some confidence. And then, you know, all of a sudden, I thought it was really interesting that in 2010 for the Olympic Games, instead of like, you know, the motto, like, we would be super happy to host you all and finish 5th, it was like our motto was actually own the podium. And we actually almost won the Olympics, or maybe we did, I don't remember. Wow. And it was, I mean, this was uncharacteristically Canadian. And I think that, you know, entrepreneurs growing up now are growing up in a very different sort of Canada. And that's, I think, if anything I could say, I mean, the boldness, the unapologetic entrepreneur for wanting to do something huge and crushing their competition in doing so without apology. That's awesome. And I think that's something I'm starting to see embedded in the psyche of Canada, and I think that's awesome. And that's what's starting to attract people, because it's people that attract people, right?
And we say this all the time, like the oil and gas and miners, I mean, they're making big bets. They're cowboys, they're going after it. That's very Canadian. I mean, but we don't see that same appetite in technology, right?
I remember my first fund, and I go to a lot of, you know, high net worth, and I talk about technology, and I'd say, like, you know, you should have some allocation in this fund for, you know, technology, and they'd be like, that is so risky. And I'd be like, but you invest tons in mining. And they're like, junior gold. That's junior gold stocks. And I'm like, and they're just like, no, that's okay. But that was really honestly like normal in Canada, because for a long time they made a lot of money doing that, and tech really hasn't delivered, and that hasn't changed yet. I mean, it's starting to change. Mm-hmm. So tech needs a good cycle of strong delivery, and it will, you know, really be self-sustaining.
Okay, you get your question after. One, maybe two more questions from people who have not asked a question yet. Go ahead, sir.
Sergey from Income Club.
Income Club, Chris.
You invest in the long-term deals, right? From your point of view, what is the description of the ideal blend of founders?
So that was the hacker, hustler, designer composition. I think that we talked about. That we talked about. That to me, and Fred Wilson writes a great blog on the composition of a founding team in avc.com that I would direct you to. avc.com. Yeah. Okay. Sure.
One more. Go ahead, sir.
My name is Neil. If you were to start a company, if you were an investor, is there like a specific problem or harm you would go after first? You have to start on your own. That project.
What startup would you start?
What a great question. All of a sudden my mind just went like I literally hit a tornado. I look at and see so much that excites me and that is so innovative right now. I would probably find what really excites me right now is sort of like with the advent or the penetration of mobile devices in verticals that really the incumbent is like pen and paper. And now these people are walking around with computers in their hands effectively. I would probably focus on a mobile vertical kind of play, whether that's style seat, for hairdressers or like big deep verticals or contractors or all these people who've never sat in front of a desktop, and you have the opportunity to introduce to a huge multi-billion-dollar vertical a sort of platform.
Okay, you're gonna hate me for this because I didn't warn you.
Hit it.
So thumbs up or thumbs down, and I'm gonna just say a word to you, and you're gonna go thumbs up or thumbs down. Okay?
Is there a okay?
They're your thumbs down. Security. Bitcoin. Marketplaces. Crowdfunding.
Maple Leafs.
Feel free to shout out a vertical if you're interested.
Your response to crowdfunding.
Sorry?
Why your response to crowdfunding?
My response is not that there's not big opportunity in it. It's like there's not huge. There's going to be a winner in each sort of vertical in crowdfunding, and I think it's sort of like really hard to hit a new one that hasn't already been done. So it's not that I hugely believe in it, but I couldn't fund something that was like AngelList now, right? I mean, it's there, it's done. And there's a crowdfunding platform for almost everything you can think of right now. So just the capital requirements to get something off the ground and something that hasn't been done would be highly intensive for a seed fund.
Social media.
I think, it's probably a similar answer. I think that there's the winners are sort of have emerged. I mean, Twitter's there, Facebook's there, Wattpad has books, and so on.
Ad tech.
Really, really tough multiples, so I'm giving it this.
Wearables.
Wearables. Wearables, I'm giving this.
That's obviously.
No, I'm not, because it hasn't been one.
Right.
I mean, it's still first generation. I'm still wide open. I have an investment in wearables called OhmSignal, which I'm hugely bullish on, which integrates sensors directly into the fabric of the shirt or any other textile. And the thesis under which we invested was that people don't want to wear shit. Like you have to make what they wear smarter, not ask them to wear new things. And that's our thesis. We think that's going to evolve over time, and we're hugely bullish on that marketplace. And so we've invested in who we consider the leader in that space.
Gaming.
It's a massive market, but it's so difficult to invest in because it's like, it's a spin the wheel. You don't know what the winner is going to be. Apparently, the winner is like Kim Kardashian or Katy Perry.
You don't like that. It's hits-driven.
It's totally hits-driven. Yeah. I do love it. I mean, one of my first investments was Social Deck, right?
Yeah.
I mean, that was a cross-platform gaming platform.
Right. Blockchain.
Yeah, it's huge. Love it.
Okay, we're going to wrap it up here. So, did you get inspired? Anybody? Okay. Did you learn something? Now, the third thing is to connect, and it's not just about, you know, rushing Matt or Jonathan or some of the other investors here, but also connect with each other, because, you know, one of the things that really sort of led to the development of Startup Grind is that it is grind. It's hard, right? And so, you know, connect with your other founders, help build a community, set up a coffee, and, you know, figure out, you know, how you can help each other. And Matt, thank you.